everybody. My name is Chris. I will be starting things off for you all this afternoon. Thank you for taking the time and joining us. We appreciate it, and hopefully we are able to teach you a thing or two about tax season this year. So just a moment, please, as I have to read this disclaimer. This presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any security or contract. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. Security, derivative, and futures trading involves the substantial risk of loss and is not suitable for all investors. Each investor must consider whether this is a suitable investment, since you may lose all of or more than your initial investment. Past performance is not indicative of future results. Lightspeed Financial Services Group LLC is not affiliated with these third-party market commentators or educators or service providers. Data, information, and material content are provided for informational and educational purposes only. This content neither is nor should be construed as an offer, solicitation, or recommendation to buy or sell any securities or contracts. Any investment decisions made by the user through the use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed Financial Services Group LLC does not endorse, offer, nor recommend any of the services or commentary provided by any of the market commentators, educators, or service providers, and any information used to execute any trading strategies are solely based on the independent analysis of the user. For more information on a demo or opening an account with Lightspeed, please contact sales@lightspeed.com. We would be more than happy to assist you with any inquiries that you have. For those who were wondering a little more about the demos, we offer free 10-day demos of our platforms. These demos do also use 15-minute delayed market data, so please also be aware of that. So today's speaker is Robert A. Green. Just a brief introduction here for him. He is a CPA and a founder and CEO of Green & Company Incorporated and GreenTraderTax.com, a publishing company and managing member and founder of Green, Neuschwander and Manning LLC, a tax and accounting firm catering to traders and investment management. He's also a leading authority on trader tax and a Forbes contributor. He's also the author of the Tax Guide for Traders and Green's Annual Tax Trader Guide. Mr. Green is frequently interviewed and has appeared in the New York Times, Wall Street Journal, Forbes, and Barron's. He is the chief tax speaker at the Money Show University and Traders Expo. Mr. Green presents tax webinars for Interactive Brokers, TradeStation, Lightspeed, and other leading brokerage firms. So with all that said, I am going to turn things over to Mr. Robert Green here. And everybody else, please enjoy. And if you have any questions, please type them in the questions section. And myself and or Robert will try to get to them as best we can. So that being said, Robert, please take it away.
Thank you very much. Let me just get the slideshow going here. Okay, today's topic is tips for professional traders getting ready to file 2020 tax returns. So your partnerships and S-corps are due March 15th and individuals are due April 15th. Last year, there was a 3-month postponement with COVID. This year, there's no current postponement except for Texas with the recent disaster relief. They have 2 more months to June 15th. So I'm working off 3/15 and 4/15. So you need to focus and get ready to file. Most likely, it's a good idea to file an extension, and we'll talk about the reasons why. Here's a current photo of me. Thanks for the introduction. This information is educational. Where specific tax advice is necessary or appropriate, you may wish to consult with a qualified tax advisor, including me or one of my partners, Darren Neuschwander or Adam Manning. We are not affiliated with Lightspeed. We're a CPA firm. They're a brokerage firm. So here's a description of what we're going to talk about today. There are new and revised tax forms and tax preparation strategies based on implementing the 2017 Tax Cuts and Jobs Act, TCJA, and the 2020 COVID AIDS legislation, CARES Act. and it's pretty confusing. The TCJA was pretty new, a lot of new things. There were final regulations, and no sooner was the ink getting dry that the CARES came out and overrode some of those provisions to provide more relief. 2020 is filed under the CARES and TCJA, so you have to know which clauses to use and what's in your interest. For example, like a 5-year NOL carryback with unlimited losses without the loss limitation from TCJA. So we filed some pretty massive carryback refunds for 18, 19, and 20. And now new COVID legislation that's coming from President Biden's administration that may have some of the House's interest to override some of the CARES benefits. They thought that NOL carried back and the loss limitations were unduly helping big business. But my point is that it helps small business. It helps our clients, small business traders. So we're going to learn today how traders with trader tax status, TTS, or in the business, who are in the business of trading, how they should prepare a 2020 tax return as a sole proprietor individual. We didn't really have enough time to cover S Corps and partnerships. I took that out of the content because we only have an hour. Most of you are sole proprietors. You might have an entity going forward, and we're going to touch on that. So you're going to learn how traders eligible for TTS maximize business expenses, home office expenses, startup costs, organization costs, the works. And there are special reporting strategies to make it happen, to make it look better, to explain it, and not have questions that come up from the IRS. Now, even though you're working on your 2020 tax returns, there are vital 2021 tax elections that have to go out on time, like Section 475. So you would be attaching a 475 election statement to your 2020 tax return or extension that you're filing by March 15th as an entity or April 15th as an individual. So you have to not just focus on 2020, but think ahead for what does 2020 bring for you? Are you qualifying for TTS? Do you want that powerful Section 475? That's the tax loss insurance exemption from wash sales, exemption from the capital loss limitation. And if you make money, you might be eligible for the 20% qualified business income deduction. Make 100, write off 20,000. Lose 100, get the whole loss against your wages. Not have wash sales. So it's a powerful election. You missed the boat for 2020 unless you elected it by July 15th. Don't miss the boat for this year. We're doing this presentation before those deadlines, March 15 and April 15. Now, I know you were waiting for your 1099Bs, and that's great. And you should have them. Most brokers have sent them out by now. You know, they have to wait until the end of January because a purchase on January 29th may trigger a wash sale from a tax loss from 12/30 because it's within 30 days. So the brokers have to wait until the end of January. It's not that they're late and they rush them out pretty soon thereafter. Well, 1099Bs are packed with a lot of very valuable information, proceeds, cost basis, wash sale loss adjustments, line by line trades. But brokers follow very narrow views of wash sale rules for brokers from the IRS. It's apples and oranges. The IRS has a different set of rules for taxpayers. Brokers work off what the exchanges tell them are the treatment, like commodities exchanges or securities exchanges, but tax treatment can vary. For example, the CBOE listed option, which is on the commodities exchange, on the VXX prepaid forward contract volatility ETN, which is not a security, that's a non-equity option. That's 1256, but the 1099B says it's a security and picks up wash sales when they should not. Same for VXX. That's a very popular instrument, a lot of the volatility ETNs. So know when you can depart and have a different treatment than the 1099B. And for wash sales, you may want to use software. We'll talk about that. Now, we're going to talk about some common errors that rookie accountants who don't know trader tax make based on their intuition. And they can really and you can really botch the return and invite questions and ask for a beatdown and then get denied all these a lot of the benefits. So you don't want to make the common errors. You want to know what they are, the common pitfalls, and do certain things before year end, but mostly during tax season to avoid them so you don't have problems and don't get an exam. Now, I want you to focus on filing extensions and paying your taxes and making the 475 election or not for March 15th. Well, March 15th for partnerships and S corps, you're not paying taxes. It's a very simple extension. There may be a small payment to a few states like California, Illinois, New York, but individuals file April 15th, and that's when you pay the taxes owed. So focus on the big picture, paying what you owe, and then leaving yourself more time in the summer months and get 6 months extension, more time to file. You'll still get your recovery rebate from the COVID legislation if that's beefed up. Don't worry about that. You don't have to rush to get it. You can still get it later on. It's part of your 2020 tax return. There's a lot of benefits to filing extensions. We'll talk about it. So, trader tax return reporting strategies. Traders use various tax forms. The IRS hasn't created specialized tax forms for an individual trading business. Traders are entering gains and losses on one set of forms, 8949 for securities, 6781 for futures, form 4797 for TTS with 475. Portfolio income, interest and dividends goes on Schedule B, and only your business expenses go on Schedule C. So you're all over the map, and it's often confusing which form to be used. Forex is special treatment, not even on those forms. It's on other income, a line one. So it can create some consternation at tax season. It's when you're working with TurboTax or some of the tax softwares, they're not really that savvy to what the trader tax needs are, and it can be confusing. And people can shy away from using a Schedule C because they think only expenses go there. It's a red flag, and they're afraid to use it. But I'm going to show you how to mitigate that red flag and how you absolutely should use what you're entitled to. So if you're an individual trading, you had an individual brokerage account in 2020 with 1, 2, or 3 brokers, one account in your name, second account in your spouse's and your name listed first or second, joint account. Third account just in your spouse's name, fourth account in an IRA. Well, the trades in accounts under your name, your individual and the joint account with your name, those count for trader tax status. The IRA does not. The spouse's account does not because you're the trader, your spouse is the investor. So you have an individual account. You didn't tell the IRS anything. You didn't say to anybody that I'm a business, but we're going to look back at 2020. And if you pass muster for eligibility, if you meet our golden rules for trader tax status, bingo, you can claim, after you assess, you can claim trader tax status by simply adding a Schedule C for your trading business expenses. So you're claiming that unincorporated business status after the fact. You didn't have to set up an entity. You didn't have to tell the IRS anything. Now, don't confuse that with that you absolutely need to tell the IRS that you want Section 475. TTS is like undergraduate school. You go on your own. It's online. You graduate, and then if you want to go to grad school, 475, you have to apply on time. But the undergrad, you don't apply to anything. You just self-educate and claim it as an analogy. So trader tax status is a term that I coined years ago. It constitutes business expense treatment, and it unlocks an assortment of meaningful tax benefits for active traders who qualify. The first step is to determine eligibility. If you do qualify for TTS, you can claim some tax breaks such as business expense treatment after the fact and elect and set up the other breaks like 475. So if you come to me and say, Bob, I got a big loss in 2020. I have a bunch of expenses. I didn't elect anything. What do I need to do? What can I do? Can I write everything off with TTS? And the answer is no. You can write off the expenses from gross income, but you're stuck with a capital loss limitation of $3,000 against other income because you didn't also elect 475. Yes, you qualify for trader tax status, but you did not elect 475 by July 15th, the due date. So you're stuck with a capital loss carryover, which might give you pause on electing 475 this year because you need capital gains income this year to use it up, not 475 ordinary income. Now you say, Bob, also I had health insurance and I wanted to do a retirement plan for last year. Can I do it on my trading with trader tax status? No, you also had to go the extra mile of setting up an LLC S Corp to pay yourself wages before year end, to deduct the health insurance and the solo 401k retirement plan contribution. So yes to TTS for 2020, but no to the rest, but yes for 2021 to the 475 election, setting up the S Corp, arranging the health insurance and the retirement deduction. So let's click this link and come over to our website Tax Center and look on how to qualify for TTS. And, substantial, regular, frequent, continuous, seek to catch swings in daily market movements rather than long-term appreciation. That's too vague. A lot of you think you might hit that. I give you golden rules on volume, frequency, average holding period, the big three. So for volume, I'm looking for 4 trades a day, 16 a week, 60 a month, 720 a year annualized. So for half the year, that's fine. It's not 720 for half a year, it's half that. You got to qualify at least for Q4. A lot of COVID traders got in after the COVID crash in February, March 2020. They established this trend of volume by, the summer or early fall. Count each trade separately, not round trip. You can scale in, scale out on your complex options trades. Don't count the legs if you put on a combo complex options trade and the broker puts on the legs for you. Frequency, I'm looking for 4 days a week with at least one trade, over 75%. Holding period, we're looking for 31 days. That's a bright line test on average. So you're trading weekly options, some monthly, some day trading of equities. You want to make sure the great majority of your trading is well under 31 days so that when you have a few outliers that go over, it doesn't drag you out of the average of 31 days. That's otherwise disqualifying. You can be full-time or part-time, looking for 4 hours a day, avoid sporadic lapses, intention to run a business. You have several computers and monitors, account size, patent day trader, at least 15,000. If you use an outside automated trading system that someone else created, you may not get credit for that. A trade copying service, you may not get credit for that. If you're doing manual trades and you use a scanner for general information only, that's good. And outside investment managers, not TTS. Retirement funds, not TTS. So back to the slides. In the slides, we have links coming back to our tax center. You could just go to the tax center anytime you want. So back to the TTS expenses on Schedule C. Hey, you might have $10, $20, $30,000 of expenses. You might save $5, $10, $15,000 in taxes. It's worthwhile doing this. Other sole proprietorship businesses report revenue, cost of goods sold, and expenses on Schedule C. That is the form for their profit or loss from business. It's all encompassing, but it's different for traders. First you got to qualify for TTS, and then you report your trading business expenses on Schedule C. Again, your trading gains and losses go on the other tax forms. Now, if you don't have TTS, the Tax Cuts and Jobs Act, TCJA, suspended all investment fees and expenses. Only one deduction is left, margin interest expense, up to margin interest income as an itemized deduction. But with the SALT cap on state and local, you might be using the roughly doubled standard deduction. So you don't really want margin on Schedule A. You want it on Schedule C. Now, if you're using an entity, it looks a lot better. All the trading gains, losses, business expenses are all consolidated. For example, if you have 475 on your K1, you might have 200,000 of trading gains with 475 ordinary income, 50,000 of expenses. So you have a 150 net income on your Schedule E. It looks fantastic. The IRS thinks you're invested in a good hedge fund. It's so much better than the Schedule C. So again, your sale of securities, that's your equities, your equity options, your securities ETFs, your options on securities ETFs. They are first reported on Form 8949. That's that cost basis reporting where there's proceeds, cost basis, and then wash sale loss adjustments. Then the total feeds into Schedule D. You're using the cash method. That's the realization method. You don't have a capital gain or loss until you sell it. Now your crypto goes on 8949 too, but crypto is not a security, so there's no wash sales of 475, but it's also the realization method. So everything moves over to Schedule D where you had your capital loss carryover from the prior year. So a lot of people made money last year. They have gains on Schedule D. Some of you still had some capital loss carryovers from 2019. They're fully absorbed. On page 2 of Schedule D, if there's a net loss, it's limited to $3,000 against other income. Now, capital losses are unlimited against capital gains. They're only limited to $3,000 against other income after you wipe out all the capital gains. Now, some brokers give you all this cost basis information on the 1099B. In fact, that's what they do. The proceeds, the cost basis, the wash sale loss adjustments. A few might also go an extra step and provide you with an 8949. But here's the thing. If you have multiple brokerage accounts, if you have also trading in an IRA, if you have, you probably, and if you have trades in equities and equity options with overlap, you're going to need a trade accounting software like TradeLog to calculate your wash sale rules according to IRS rules for taxpayers, which differ from IRS rules for brokers. So let's click on the tax center and go over to that and look at some of these 8949 issues that I'm talking about. You'll come back here later on. So you want to, one solution is to elect 475. There's no more wash sales. So I'll go over some of this more later on in the PowerPoint as well. Now, let's say that you had the clairvoyance to elect 475 for 2020, and you have mark-to-market accounting, which exempts you from wash sales. So you're not using Form 8949. You're departing from your 1099B. Your business traders who elect and use Form 4797, and it's conditional on having trader tax status. So if you elected it but never qualified for TTS, then it would be null and void. But assuming you have TTS, you're going to report business trades line by line on Form 4797 Part 2, ordinary gain or loss. Mark to market, MTM, what that means is your open business trades are marked to market at year end based on your year end prices. Now, day traders may be all in cash, but if you had some open positions at year end, they're marked to market at the year end prices. Now, if you had some open, thinly traded leaps, which usually are not part of TTS because they are more long term, but they could be part of your TTS strategy, and they're thinly traded, there may be a crazy mark to market price that you may dispute, but you got to speak to an attorney about getting a different price than the broker provides. Usually MTM is not a big deal. So the key thing is not so much the MTM, the key thing is the ordinary loss treatment. It avoids the capital loss limitation. So if you lose 100,000 and your wages are 200,000, you could write off the whole 100,000. You're not stuck with a 3,000 capital loss limitation. If you make 100,000, and the broker says you're supposed to pay tax on 150,000 because there's 50,000 deferred wash sales at year end. No, you pay taxes on 100,000 because you have mark-to-market accounting, 475. And if there's a big loss and you wipe out your wages and there's still a loss, you can have an NOL carryback for up to 5 years in 2020 under the CARES Act. You're going to need the good trade accounting software like TradeLog. I'm doing a TradeLog event tomorrow, by the way. You can sign up for it on our website. I'm going to talk about setting up trading business, the partnerships, the S-Corps, and TradeLog is, I think, going to give a presentation about their trade accounting software. You can download right from Lightspeed, right into the software. It's a great way to calculate the wash sales and generate the Form 8949 and or the Form 4797. clients of ours, we insist on that because there's no way to do it manually. Now, there are still some things that you have to do manually, like looking for options, straddle loss deferrals, and things like that. So you can learn more about 475 in our tax center, in our guide especially. We're going to cover more, the election procedures, we're going to cover more about it shortly in the slides. Now, let's say you're trading 1256 contracts, your regulated futures contracts on all sorts of energies, metals, financials, agriculturals, whatever they be, their currencies, they're regulated futures contracts on a U.S. Commodities Qualified Board of Exchange, Section 1256 contracts. They use Form 6781, unless you happen to elect Section 475 on commodity futures. Why would you do that? Well, let's say this year you got into futures for the first time, and bingo, in Q1, you lose $50,000 and you can't do a carryback, and you may stop trading futures. You may want to elect, you don't want a capital loss limitation. You want to elect 475 for ordinary loss treatment. But generally, you don't want to elect 475 because you want to retain the lower 60-40 capital gains treatment. Let me just go back. 60%, this is the last bullet point here. 60% is a long-term capital gain, even on a day trade. And subject to the lower long-term rates, they go up to 20% at the highest bracket, 15% in the middle brackets, 0% in the lowest two brackets. The other 40% in the 60-40, that's your short-term capital gain, tax at the ordinary rate. So you do what is the blended rate? It's 10.2% lower than the top rate of 37%. So if you're trading securities and you're in the highest bracket because of you and your spouse's wages, business income, and trading success, instead of paying 37%, you're paying 26.8. That's 10.2% lower. There are meaningful differences throughout the brackets. Now, the nice thing about 1256 is it's mark to market, which means there's no wash sales, and the broker can use summary reporting. So there's a separate 1099B for 1256 contracts. Look for line 11 that says aggregate profit or loss. It's one number, bingo. You just put that right onto Form 6781, Part 1, that you made 100,000. It's broken down 60,000 long-term, 40,000 short-term, and then moves over to Schedule D. It's nice and easy, and it's mark to market. Now, if you happen to have a loss on 1256, let's say in 2020 you lost 170 in securities, 30 in futures. You didn't elect 475. You're out of luck on securities. That's a capital loss limitation. But on futures, if you had a futures gain in the prior 3 years, so you lost in futures in 2020, but you have a futures gain in the prior 3 years, you can check the box D on top of Form 6781, which says net Section 1256 contracts loss election, and then you could carry it back 3 tax years, but only against 1256 gains. So come over to the 1256 page in the tax center, scroll down and look at the table rates here. Let's say you're in the lowest two tax brackets, 10 and 12%. The long-term rate is 0%. The 60-40 rate is 4%. Instead of the savings is 10%. Instead of paying 10% on securities, you're paying 4% on futures. Look at the 24% bracket. Instead of paying that on securities, you're paying 18.6 on futures. So look at this 12% difference in the 35% rate. You're saving 12%. This is the percentage savings. So it's really nice throughout the brackets to trade 1256 contracts, but it's a whole different beast. A lot of people made money on options last year, equity options, equities, securities. You can tell them there's benefits with futures, but they don't know futures. They trade securities. This is the most important point I'm going to make today. All the tax stuff I'm talking about, it is all opportunities for savings, is pitfall for losses. All that being said, don't have the tax tail wag the dog. Don't do things for tax purposes that go against market decisions. You're trading to make money. End of story. The taxes are the gravy, the afterwards, and they're meaningful. But if you start doing things for tax savings alone, you're going to get yourself into trouble and you may regret it. And I certainly don't want to be the person who got you to do that. So don't have the tax tail wag the dog. All right. You want to deduct your business expenses, startup costs, home office. You want to get every dollar you're entitled to. And why not? So the TTS business expenses on Schedule C, what does that include? Let me just check on the timing here. Okay, we're halfway into it. We're doing pretty good. We are going to go a little late. There is not a hard stop today. Okay, your tangible personal property. That's a mouthful. What is that? That's your computers, your equipment, your furniture, your fixtures, your hard property, not supplies, things that you used to always depreciate. Well, the IRS said, listen, we don't want these depreciation schedules and all that extra work for something that's not spending a lot of money. Yeah, if you're spending $100,000, you better depreciate it. But if you're spending under 2,500 and there's like a safe harbor election that goes with it on your return, if you're, and that's in our guide, but if it's under $2,500 per item for equipment and furniture, you can just expense it. You don't have to depreciate it. So your new computer, your laptop, your monitors, your desk, your chair, all that's tangible personal property. But let's say you buy a powerful workstation for $5,000. That's above $2,500. Okay. Do Section 179, 100% depreciation or 100% bonus depreciation under the Tax Cuts and Jobs Act or accelerated depreciation. You're going to most likely get full expensing the first year. So you had TTS for Q4 2020 or Q2 and Q4 or Q2, Q3 and Q4. It didn't have to be the full year. In December, you ordered some new equipment, you ordered some new furniture, you took delivery before the end of the year and you put it into use. That's a complete 2020 100% write-off. It's fantastic. Now, there's also a look back period for startup costs. Let's say you started trader tax status July 1st, 2020. You can go back 6 months to capitalize Section 195 startup costs. That was your subscriptions, your education, your publications, your soft costs. You can go back further for your hardware, but using a fair market value. If you bought the computer a few months, you probably, before you commence TTS, you probably can use the sticker price. But if it goes back a while, you probably need to give a discount, fair market value on it. Now, if you set up an LLC, your organization costs for us, for the lawyers, for the state filing fees, the online incorporator, all of that you capitalize and you can write off. So your education expenses that you paid after commencement of TTS, full business expense. Before commencement of TTS, pre-business, not deductible. However, you can capitalize it as Section 195 startup costs going back 6 months. So what is the start date? And then what can you go back to recoup? That's really important because there's a lot of money on the table and what you can recoup. Now, what else? Subscriptions, scanners, publications, market data, professional services, chat rooms, mentors, coaches, supplies, phone, travel, seminars, conferences, assistants, consultants. No more entertainment. Tax Cuts and Jobs Act took that out. If you have meals with another trader, they beef that up from 50% to 100% with the emergency COVID relief at year end last year in December 2020. But you're not having meals with, in-house meals. We don't go for that. You're not having meals with your spouse. It's meals with other traders. Now, speaking of your home, that home office deduction is wonderful. Suppose 20% of your home is a home office and your home costs are $50,000. You got $10,000 plus depreciation. You might have a $15,000, $20,000 deduction. Don't go overboard. Use the square footage method. It's usually an exclusive use area of the home. Could be a separate room. Could be just an area that you cordon off that you use exclusively. Maybe you share it with another business or a remote job under COVID, so our accountants can help you sort out exactly how to do it. The IRS is much more amenable to that deduction now. There is income needed to unlock the deduction, except for the mortgage and real estate. We'll talk more about it shortly. Margin interest could be a big deduction for you. If you leverage your business trading positions and then to buy more positions, that's business interest. If you leverage your investment positions in a separate account and use some of the finance that the leverage, the funds to purchase trading positions, so you leverage your investments to trade with. It looks like investment interest, but there may be a way to treat it as business interest because you can tie the financing of the lending to the using of it for TTS. Stock borrow fees for short sellers. That's a big number. You want that on Schedule C. You don't want to try to squeeze that onto Schedule A where it got left out of the instructions for other itemized deductions. We do come up with a rationale to do it. It's a little tricky, so check with us if you don't have trader tax status. There's also alternative treatment to capitalize it in your gains and losses that our tax attorney might suggest as an alternative too. So if you get stuck without getting a deduction for borrow fees, check in with us. Internal use software, you're creating your self-created automated trading system. Section 174, you're capitalizing it and then expensing it with commencement of the system. If you're self-creating it, you may not have a lot of expensing. If you're using other programmers and designers, then you may not be able to get credit for it for TTS. It's a little nuance. Check back with us on that. So on the home office, you're using the form 8829. You don't go right to Schedule C. You got to go through the home office form. It's one of the most significant deductions for traders. It requires gains to unlock most of the deduction. The mortgage interest and real estate tax portions they don't require income. And it also helps you navigate around the Schedule A SALT limitations for state and local tax. I'm talking about the real estate tax. So it's a little nuanced, but you want to take that full deduction, even if you don't have trading gains to unlock it. You have losses for 2020, it will carry over to use it next year. So it will build up and be a bigger and bigger deduction for ultimately when you do have trading gains. So absolutely go for the full home office deduction. You can still get exemption on sale of the home for selling a primary residence. There will be some recapture and depreciation. That's not a big deal. You're getting the benefit, then there's recapture. It's just a timing thing. So go for the home office deduction. Renting, you get the whole full thing. You don't have to worry about mortgage and real estate tax. Startup costs, we talked about that. You're going back 6 months, you're capitalizing, let's say 10, 15, 20,000, especially if you have education. Then you're amortizing 5,000, up to 5,000 the first year, with the rest over 15 years. With the accrual method, you may be able to say some of the education applied to after TTS commencement. I go through a whole example of cash versus accrual in Green's 2021 Trader Tax Guide. So, by the way, a lot of what I'm talking about today has to do with the guide. So take a look at that on our website. You can just go right over to the guide. The tax center is just excerpts from the guide. This has a whole section on home office, business expense, Schedule C, tax reporting strategies. Everything we're covering is in the guide. So check that out. It's $60. You can download it right away. It's really simple to do. Let's go back to the slides. So you go for the gusto on all your expenses. Now you got a Schedule C with a lot of expenses on it. And that's the only thing that's on there. And you're starting to wonder, is this going to fly with the IRS? It looks like a red flag. I mean, there's no income on the schedule. Your local accountant's nervous about it. Not even sure you qualify for TTS, doesn't really want to do it. Is figuring maybe I can put trading gains and losses on Schedule C. That's a common error. Will get you audited. You need to make Schedule C look better. Sole proprietor business traders report the business expenses on Schedule C and the trading income and portfolio income on the other forms. That will confuse the IRS. The IRS may automatically view their computers who do most of the audits now and sends the audit letters. You know, you don't need an agent to audit you. The robot agent will audit you. And they don't understand the trading business. So you got to not only present your return to look good to an agent, but you got to present your return to look good to their robot. And we know the tricks of the trade, or not the tricks, the proven strategies of the trade. There's nothing tricky about it. So the IRS may automatically view your Schedule C as an unprofitable business, and then they may generate a hobby loss letter. Hobby loss rules don't apply to trading. You know right away when you get that letter asking for business profit 3 out of 5 years, you know, bingo, that's a hobby loss letter. You can reply saying hobby loss rules don't apply. Trading is not recreational or personal in nature. It's not like gentleman farming or gambling or, you know, horse racing, things like that. So to mitigate this red flag, we advocate a special strategy to transfer a portion of business trading gains, not reporting the trading gains, just a portion of them, to zero out Schedule C. So Schedule C shows zero so the computer doesn't even know there's a Schedule C. It just sees zero on face of 1040. And there's no income, so the computer doesn't think there should be self-employment tax. And there's no big loss, so the computer says, is this a hobby loss business or a passive loss activity? So how do you do the transfer? Well, it's a good strategy for sole proprietorship business traders. You transfer some of the gains to Schedule C. You're using the other income line, not the gross income line. It's the other income line to transfer enough to zero out Schedule C. Why do I keep saying zero out? Well, let's say your Schedule C, when you prepare it in TurboTax, it shows minus 20,000. But it shows a home office carryover of 10,000 because there wasn't income to unlock the home office form. And it shows Section 179, a unused carryover of 5,000. So you got 20, 10, and 5. That's 35,000. So if you transfer 35,000 of your 100,000 of business trading gains, you're going to zero it out and unlock the 179 depreciation and unlock the home office. And you'll get the full 35,000 Schedule C deduction. That's a big Schedule C expense. It's usually less than that. But just to make the point, have it home. Now you don't want to transfer 36 or 37,000 because then you're going to have self-employment income, what's going to look like self-employment income on Schedule C of a few $1,000s. Trading business is exempt from self-employment income, whether you have 475 or not. It's not self-employment income. That's a good and bad thing. Some people want self-employment income for deducting health insurance and a retirement plan. A lot of people are happy not to have self-employment income because self-employment tax is FICA, the 12.4%, the 2.9% Medicare, 15.3% total on the Social Security base of 143,000. You don't want to pay that. That's one of the beauties of trading is you don't owe self-employment tax. Now, there's an exception to the general rule. Traders who are full members of a futures or options exchange are an exception here. They have self-employment income under Section 1402I. Those are the SEI section, self-employment income statute code. On their exchange-generated trading gains reported on Form 6781. They don't even have to, they want the Schedule C for their expenses, but their 6781 is triggering SEI less their Schedule C expenses. For you, it's not. For you to have self-employment income, you got to set up the S Corp to pay yourself wages to do that. So the transfer is going to wind up unlocking the 175.79, 100% depreciation. It's going to unlock the home office deduction. Now, you don't need the transfer for home office as an alternative strategy, and you don't need it for the 179 depreciation if you have wages. It can look to your wages or your wife's wages. So now this transfer isn't included in the tax forms. It's not in the instructions. It's the green trader tax industry practice designed to deal with the fact that the IRS has insufficient tax forms for sole proprietor trading businesses. And we need to carefully explain in the tax return footnotes what we're doing with this strategy. I like the transfer. It unlocks deductions in states like New Jersey that doesn't allow losses, and it does away with the red flag factor. Now, an alternative strategy, if you don't have hanging 179 because you have wages where you're using 100% depreciation, and the only thing you want to unlock is the home office, you don't need a transfer strategy. You can report the gains from trading from business trading on Form 4797, 8949, 6781. You can put that on line 8 of Form 8829. You're basically telling your home office form, here's where you'll find my trading income. It's on this form. It's not my investment income, it's my trading income. And that will unlock the home office deduction. Now, there's footnotes that are really highly recommended for a trader tax return. Your local accountant may not be comfortable writing them. You may not be comfortable. You may or may not need it. But if you can pull it off, I recommend you do it. We recommend that business traders include well-written tax return footnotes explaining first the trader tax law and the related benefits, why and how you qualify for trader tax status. So you're explaining the basic trader tax law that's on our website. You're giving the general golden rules from Green Trader Tax. You're saying Green says 4 trades a day per the Pope Court. We have 10 to 15, or I have 10 to 15. Green says 75% because tax courts talk about problems with 50%. I have 90%. You know, I'm 4.5 days a week or 4 days a week. Green talks about holding periods average under 31 days per the Endicott court. I'm day trader, swing trader. My average is 4 days. Those are the big three, and you go down the line with all the factors. You blow the IRS away, whether you're part-time or full-time. You're explaining if you're part-time. Hey, I'm a West Coast trader. I wake up at 6 a.m. I trade the morning session before I do work. I'm working at home remotely with COVID. I have very flexible hours. I put in 8 hours a day in the markets or over the 4 requirement. I have plenty of time in the markets. I document it all, and I get my other job done too. So you're kind of blowing the IRS away with what the requirements are. They can see the trades on the 1099B for the securities. They don't see it for the futures. So you're explaining you qualify for TTS. Don't mess with me. Hey, I elected 475. I'm ready to sign a perjury statement with my 3115 next year when I file my return. I made my capital gains election for Section 988 4X. I'm doing the income transfer strategy, and here's the reason why, because you think it looks like I'm a loser, but I'm very profitable, so I transferred it just to show you that. Didn't change $1 of taxes. It just showed it to you a little bit better. So footnotes help address any questions the IRS may have about TTS, qualification, and the various aspects of reporting on the return before it has a chance to ask the taxpayer about it. I like to nip questions in the bud. I know a lot of CPAs, they don't want to volunteer anything, but I think when something's begging a question, it's in your interest to say, this might be your question, and here's the answer, and don't even mess with me because I'm covered here. I'm solid. I'm rock solid. Now, Section 475, this is the TTS unlocks the business expenses. You got them for 2020. Now you're thinking, should I elect 475 for next year? Unless you had the premonition to elect it for last year, then you're going to use these things in 2020's tax return. Otherwise, we're talking about 2021 going forward. It's tax loss insurance, fire insurance, your trading house burns down, bingo, you get a big check back from Uncle Sam a lot faster than using that puny capital loss carryover, 3,000 limitation against ordinary income every year for many years to come. On the plus side, you got the QBI deduction, 20% at 100,000, write off 20,000, didn't take a penny of cash, but you get a $20,000 deduction. That's incredible. First, the tax losses. Let's take a quick break for a second. And I'm going to try to pick up the pace. Only TTS traders can elect and use 475, not investors. Section 475 traders are exempt from wash sale loss adjustments on securities, which lead to phantom income. You don't want to pay taxes for 2020 on income you didn't have because it's wash sale at year end and you really upset to learn about it when you got your 1099B because you got back in January. You should have stayed out of it. A lot of you are going to have trouble digesting that. 475 ordinary losses are exempt from the capital loss limitation, exempt from the capital loss limitation, exemption from the wash sales. And they comprise net operating losses. So your TTS expenses and your 475 losses are NOLs that you either carry forward or you carry back. Under CARES, you do a carryback. Under TCJA, which applies again for 2021, it's only a carry forward. So TCJA introduced an excess business loss limitation, 500 married, 250 other taxpayers. That's what they did for 18 and going forward. And they were all happy with that. They didn't want people doing carrybacks to get the old corporate rate, which was much higher. We were very upset to lose carrybacks for our clients because that was one of the best things ever was you lose a lot of money, you do a carryback, you get a big check, you replenish your trading account, you're back in business. Thankfully, the CARES Act said, hey, that TCJA stuff about excess business losses, having an NOL, no more NOL carrybacks, suspend all that. Not only can you do a carryback, but it's 5 years. Not only can you use your losses, there's no excess business loss limitation. So there's no limitations for 18, 19, and 20, but TCJA kicks back in again with NOL carryforwards only for 2021. Now, let's say you're a profitable trader. You say, Bob, I don't have wash sales. I think you do, but you think you don't. And you're not worried about capital loss limitation. I think you should, but you're not worried about it. So what's in it for you? The 20% QBI deduction if you don't get priced out of it. If you make too much money, you're not going to get that deduction. We'll talk about the thresholds shortly. Otherwise, you get 20% of the 475 less your TTS expenses. On the lower of that or taxable income, there's a bunch of haircuts. That's that QBI deduction on Form 8995. And if you have the wage and property factor, the Form 8995A. Trading is a specified service activity. So if you get priced out of it, you're out of luck. If it wasn't SSTB, specified service trader business, like a manufacturing company or real estate, you could make all the money you want and still get the deduction, but you'd have to meet the wage or property factor. Traders don't really have a property factor, and they only have a wage factor if they have an S corp paying themselves wages. So if you have an S corp and you're making for 2020 under 426, you might get some in the phase out range for 100,000 married under the 426, but under the 326, if you're Schedule C, so let's say you're a Schedule C individual and your taxable income for 2020 is 163,000. That's right on the threshold. If you're 165 and you're a few dollars over, you're not going to get the QBI. So your taxable income is 165. You had wages of 100,000. You had trading gains of 100. You're 200. You're way over the threshold. You don't get a QBI. But if you didn't have those wages and you just had trading gains of 100, you would get the QBI. So QBI is the icing on the cake. If you got a really big cake, you don't get the icing, but that really big cake is a good thing. You want to elect 475, listen up. These are the procedures. Your existing taxpayer individuals that qualify for TTS, they want 475. They must file a 2021 475 election statement with their 2020 tax return or extension due by April 15th. It's now too late to elect for 2020. So I think you should file an extension. You print out the 4868. You staple the election to it because you can't e-file it in TurboTax as a consumer software user. Only professional programs really can include the election. So you print out the extension, you mail or fax it with the election, And then you e-file your return even before April 15th, but you make sure that the election goes to the IRS by fax or mail, that you don't mess with it. Now, if we're e-filing a return with our software, we can include the election, but you probably can't. Now, in the guide, it's got the exact election statement. I'll have a blog post with more details on it over the coming weeks as well. Make sure you get that election done properly. The second step next year, when you file your 2021 return, is to include the Form 3115. Now, don't forget your existing partnerships and S Corps, when they get ready to file their extension by March 15th, they need to attach their election statement to their extension. Now, if you happen to set up a new entity this year, let's say you set up an LLC from, this month, in March 1st, you set it up. You're going to have 2.5 months, 75 days from inception to make an internal election for 475. So if you set up a new LLCS Corp in September 2020 and you made an internal election within 75 days of inception, you adopted 475 from inception. You didn't change your accounting method. There is no 3115. You didn't have to file with the IRS. It's an internal election. Now, if you filed your 475 election for 2020 by the COVID extended deadline of July 15th, and we helped a lot of people do that, you're now going to be including the 3115 with your 2020 return. So file your extension so we can help you with the 3115 after the April 15th. We are going to accept new clients again after April 15th. We shut down new clients a few weeks ago. We're completing some new client evaluations that were scheduled before March 1st. Anyway, clients that don't give us all their information after March 1st really go on extension anyway, if they don't give it to us by March 1st. So we're focused on extensions and the elections. You should be the same. Get that extension done with our resources and the election, and then see if we can help you further afterwards. We had a surge in demand, just like all the trading companies did, and that you all know about. We've hired more CPAs, more administration people, but we do have to shut things down. And we always save a seat at our table for returning clients, but we ask that you purchase your retainer immediately. Otherwise, we may have to give up your seat. So we always save that seat for existing clients. It's a very busy year. It's not anything we did. It's we're good at what we do, so we have a good reputation, but it's just because of all the new traders out there, and they made a lot of money and they need a really good firm to help them. So they've come to us. So let's talk about the tax extensions and the payments that are due. That's what you want to focus on. The 2020 income tax return for individuals are due April 15th. That's the IRS keeps reiterating, we're not extending. We're not extending. It's April 15th. CPAs want you to get it done April 15th. Now, if you're Texas, it's June 15th, but right now it's April 15th. Will they extend it last minute? Well, let's see what happens if COVID surges again, but it seems to be going pretty good with the vaccine and the herd immunity or whatever. We'll see what happens. Accountants are working virtually now. We always worked virtually, but a lot of your brick and mortar accountants got the impetus to now work virtually, so people can get access to good accounting help. So there's no reason to extend the deadline. So don't you plan on an extended deadline. You're going to have to pay what you owe on April 15th with the extension. Now, some brokers might correct 1099-Bs. You might not get K1s from your partnerships and S Corps. You don't have to rush in a return. You're not sure about trader tax status. What you need to rush in is the extension on time, the payment, and the MTM election. That's what you need to focus on. It's a very simple form, the extension. What you think your liability is going to be, what you're paying, what you can't pay, and the election. To the state and federal. Some states you don't need an extension unless you owe them money, in which case you do. It's not an extension to pay. I want to stress that. It's an extension to file, not an extension to pay. Traders can request an automatic 6-month extension to file individual federal and state income tax returns up until October 15th, 2021. It's a 6-month extension for individual. The Form 4868 extension instructions point out how easy it is to get the automatic extension. No reasons required. You don't have to say the dog ate my homework. I mean, you just file the extension and it's automatic. You don't wait for them to grant it. It's automatically granted. It's an extension of time to file a completed tax return, not an extension of time to pay. I keep saying that over and over. Taxpayer should estimate and report what he thinks he owes and pay it. Now, we suggest taxpayers learn how the IRS and state, how they assess late filing penalties, late payment penalties. You want to avoid them. You want to reduce them. Don't count on the IRS saying, well, because of COVID, we're just abating that. They haven't even done that for last year. There was talk of that and they haven't even done that. So if a taxpayer cannot pay, so you owe $200,000, you had a monster year last year. I mean, I did so many consults where people made $500,000, million, 2 million. I never saw anything like it. Well, they're going to owe $250,000, $500,000, $1 million. And if they've been keep trading all that in the markets, and if the markets go against them, which happens to some, and the outlier could end, things could change, things could turn, and they lose a lot of money. Oh, Siri is asking me a question. Sorry about that. 1 second. I woke up Siri on my Apple Watch. Well, even Apple sold off. So if you all of a sudden can't pay what you owe because you lost the money in Q1, that's a bad thing. And then now you're gonna file an extension to avoid a late filing penalty, but you're gonna have a late payment penalty, and you're gonna maybe need a payment plan and be in hot water. So try to set aside the taxes. So if a taxpayer cannot pay the taxes owed, he should at least estimate the balance due by April 15th and report it on the extension. Be sure to at least file the automatic extension on time to avoid the late filing penalties. Those are 5% per month up to 25%. So you gotta file the extension, even if you can't pay a penny. File the extension so that the late filing penalty of 5% a month doesn't apply. That could be a 25% penalty. Then you'll only be stuck if you don't pay at least 90%. And the AICPA with my partner, they're asking for 70%, but right now it's 90%. If you don't pay 90%, you're going to owe a late payment penalty. That's only 0.5% per month up to 25%. So over 6 months period, let's say you file by October 15th, that's like a 3% payment. That's not too bad. That's 6% per year, 3% for half a year. That's sort of like a margin loan with some brokers. So make sure that there's no late filing penalty and it's only a late payment penalty. Read the Form 4868 page 2 explanation. Go to our website. I'll have an update of this blog post going into this year, April 15th. There's all sorts of tricks or strategies with the extension, why it makes sense, explanation of all the penalties and more. And look on the Form 4868 as well. Set aside the taxes due for April 15th. Many traders made massive trading gains with an explosion of new pandemic fueled traders, market volatility. Some of you use the estimated tax payment safe harbor exception to cover their 2019 tax liability with the Q4 2020 estimated tax payment made by January 15th. So you said, in 2019, I just had wages and I paid the full taxes through wage withholding. 2020, I doubled my wages with trading gains, and maybe I had a little taxes I had to pay by Q4 just because, I had some interest in dividends the prior year and I wanted to cover that. But all those new income that I had for 2020 that was over 2019, I didn't owe taxes on it until April 15th because I used the safe harbor exception. By the way, learn the estimated tax rules for this year ahead. You're not going to use the safe harbor if you made massive income in 2020 and less income in 2021. You may prefer to pay on the lower of 90% of the current year versus 100%, 110% of the prior year. So learn your estimated tax rules. If you owe a fortune for April 15th, get a handle on that soon. Start setting aside that money now. Don't leave it to the last minute. If everybody cashes out of the markets to the last minute to pay their massive tax bills, which I think there is for last year, it could be a market event. Who knows? A lot of the market is tax-free money too. So it's not just retail traders with taxable accounts. I think it's a mistake to risk your tax money in the markets to the last minute. I think it's asking for trouble. Read my blog post about the estimated tax rules. Now, let's see how we're doing. We're over the hour. We don't have a hard stop. We're going a little longer. It's not a lot more content here. We're almost done. So you get the 1099-B. It's got a narrow view of wash sales just on the identical symbol in the one account. The IRS wants you to do it on substantially identical between the option at different expiration dates and the underlying. That's substantially identical across all the accounts, including IRAs. So if you have that circumstance, you want to use the trade log software to do it according to the taxpayer rules, the IRS rules for taxpayers. If you have one brokerage account and you don't trade options and you want to just use the 1099-B, then do it. You may want to check about wash sales, learn more about it all. Click on this link on our website to learn more about it. If you're stuck with wash sales and you can't elect 475, you want to know how they work to avoid them. If you take a loss on 12/20/2021, don't repurchase it until January 21st to break the chain. You can kick a wash sale down the road from January to February to March in taxable accounts. Just break the chain at year end, but never buy it back in your IRA, take the loss in taxable, buy it back in your IRA, because that's a permanent wash sale loss. The broker doesn't pick that up, but you're supposed to do that. A 475 election for this year will get you out of that problem. But if you don't have 475, you want a do not trade list. If you trade your FANG stocks, you don't want to invest in your FANG stocks in your IRAs because you could have your permanent wash sale losses. 1256 is MTM. You don't have that problem. So if you traded some ETNs, you traded VXX or options on VXX, your broker may have treated VXX as a security, but it's not a security. It's a prepaid forward contract exchange traded note. So there are no wash sales of 475. That's good if there's wash sale loss adjustments. It's bad if you were counting on a big 475 loss. The options on the VXX, the broker says it's a security. We say it's a 1256 contract. So read our content on tax treatment. It's in the tax center. See when you can override. Let's say you traded a commodity ETF. That's a publicly traded partnership, widely held. It's treated like buying and selling a security, wash sales, 475 if you elected on commodities. But you might get a K1 passing through some 1256 treatment. The sale of the ETF is not 1256. It's a security. But the K1 passes through 1256 treatment. You got to pick up that income on 6781. But if you don't add that manually to your cost basis, you're going to double count that income. Your broker's not going to pick up that pass-through income. They don't know about the K1. Trade log doesn't know about the K1. You got to manually go into trade log to add that K1 pass-through income to your cost basis. So learn more about the commodity ETFs. So some common errors on tax returns. Your accountant says, oh, that's great. You got TTS. Oh, we can put the expense on Schedule C. Okay, good. Let's put the trading gains and losses there. You got a big loss. You'll get a big tax write-off. No, the loss stays on Form 4797 and you had to elect 475, which you didn't. And they may have botched when you came to them and asked about it. They didn't know about it. They said, let's wait till year end, and now it's too late. So not only do you start going down a pitfall, a rabbit hole of problems, one after the other. And you're automatically going to get audited by the IRS if the gains and losses are in the revenue and cost of goods section of the Schedule C. Remember, our transfer strategy was very carefully done and carefully explained in the footnote. So you don't want to botch your Schedule C. You don't want Schedule C income, and even without it, you don't want the accountant saying, oh, that's self-employment income, let's pay self-employment tax. No problem. Now we can also deduct health insurance and retirement plan. No, you can't. Your Schedule C, your partnership trading income is not earned income. There is no Social Security taxes. You cannot contribute to a retirement plan IRA or Roth IRA or SEP IRA or solo 401k. You need the S Corp in place and pay wages before year end. So your IRS is going to say to you that you've done an excess contribution to the retirement plan and there's a penalty. So don't go down the rabbit hole of errors with your local accountant who's not well versed enough. Say, wait a second, let's just get the extension done. We don't even need the Schedule C expenses for the extension. I'll work that out with Green afterwards. Let's give ourselves time to work with Green and check on all this before we file. Now, if you made some big money for the first time trading, you might have triggered the net investment tax, the Affordable Care Act, the Obamacare net investment tax on net investment income. It's 3.8% on unearned income over the AGI threshold of 250 or 200 single, 250 married. It's not indexed for inflation. So you're single, you make 300 trading, you're over the 200 threshold, you owe 3.8% of 100,000, $3,800. That's annoying if it's the first time you're paying it. You could reduce it with your trading expenses, but that could be something that hits you for the first time. Now, the Biden tax plan is talking about bringing back Social Security tax if you make over 400 in a similar concept. They want they want more Medicare and more FICA. The Tax Cuts and Jobs Act. Now, if you use our S Corp strategy to maximize the solo 401k, you're not going to get hit with that 400 because you only need wages of 154 and you'll only pay the FICA on this Social Security base of 143. We're almost done here. I'm talking quick and we're finishing up the slides. TCJA, suspended investment fees and expenses. You have a separately managed account. You can't deduct your fees and expenses. You can't deduct your unreimbursed employee business expenses, your job expenses, your home office for the job. You can't deduct the tax compliance fees you pay a local accountant. You can deduct the fees you pay us because it's business with TTS. You can deduct all your trading expenses with TTS because it's TTS. TTS is your ticket. Even more important than ever with Tax Cuts and Jobs Act and CARES Act. So you got your QBI deduction thanks to thanks to TCJA. TCJA ushered in the excess business loss limitation, suspended the NOL carrybacks. No worries, because CARES kicked in and suspended that for 18, 19, and 20, but all those comes back. TCJA comes back for 2021. They lowered the tax rates, raised the standard deduction. Those were good things. The CARES Act, the big thing was the NOL 5-year carryback, the no EBL. We filed a lot of NOL returns for 18, 19, and 20. Even though we knew that the House was trying to renege on that, they wanted to take back some of those 5-year NOL, make it only a few years, still apply EBL. They thought it was being abused by billionaires, but I say it goes for Main Street traders too. The House did not get through those COVID bills, but let's see the final language on their latest COVID bill from President Biden. Let's see if they're trying to renege on some of the NOLs. We filed those NOLs for 18 and 19 under law at the time, so those should stand up. But let's see what the final language is. And before we rush in a 2020 NOL carryback, we want to wait for the final language and see what's up with that. You might have done a retirement plan early withdrawal under CARES. You could have taken $100,000 if you were COVID eligible, negatively impacted out of your retirement account in 2020 due to COVID, avoided the 10% excise tax penalty, pay the taxes over 3 years rather than the first year, or do a rollover over 3 years. And RMD was suspended as well. Also on your charity, make sure you can take 300 above the line. You got to check that box in your software so that it's not just an itemized deduction, because you may be using a standard deduction. 300 can be above the line. If you're using an itemized deduction for charity, CARES, the COVID emergency bill said you could, or excuse me, CARES said you could do 100% rather than 60%. 100% of the appreciated property and from charity. You're not limited to 60% of AGI. It's 100%. That unlocks a much bigger charity deduction for a lot of people. All right. We don't have much time for questions because we went over. But there was a lot of stuff that we got done there. Let's come over to the website. And you'll see, by the way, the tax center, you can go down the list. These are excerpts from the guide, and otherwise go to the guide and go to recordings. Let's look at some questions. Let me drink something first and see how we're doing. We got a decent number of people still with us. I'll have a very short Q&A period. I'll try to look at some questions that could apply to a lot of people. Now, if you email us questions, I'm usually really good at replying to them, but probably one of my administrators will just say to sign up for a consult. We're really flooded with a lot of questions right now this time of year, more so than any year ever. So unfortunately, we won't be able to give you quick answers to a lot of questions. Let's go down the list here. Jennifer asks, if you were profitable as a long-term investor, but opened an account as a day trader on January 2021 and lost most of those profits. Well, so you didn't have TTS for 2020. You lost a fortune on GameStop the wrong way or whatever, trading it in January, February, March. So you want to claim TTS for 2021 for just one quarter. You're in, you're out, you elect 475. You're hoping it's all going to work for you, but the IRS may say you're a COVID trader, you're not in it long enough, and challenge you. So read my COVID trader blog post about that. Lukesh asks, if I don't have TTS and sitting on short-term gains, do I still need to file estimated taxes? Yeah, all taxpayers have to deal with estimated taxpayers. If all you have are wages and you have wage withholding, you're not worried about it as much. But if you're an investor or a trader and you have a lot of capital gains and you had them the year before as well, then you have the estimated tax rules which apply to you. It's too late now to pay for Q4. Instead of paying for Q1, I like to file the extension, overpay the extension, knowing that you'll have the overpayment credit, which you'll apply to Q1 estimates and maybe Q2 too. Lungju W. I'm only giving first name, last initial. Does retail Forex elect 475? No. Retail Forex is section 988, ordinary gain or loss. You may check out the capital gains election to get into the lower 60/40 tax rates at 1256G on the major currency pairs only. Read about that on the Forex page in our tax center. Joshua H. Is claiming home office as a renter first-year trader? It's not a red flag. If you got gains, you absorb it. Where else are you going to trade? You're not trading in Starbucks with all your equipment. You're trading at home. Absolutely, you go for the home office. Go for the gusto, Joshua. Andrew D. He was talking about TTS versus 475. Or you're talking about me. TTS is undergraduate school. That's your business expenses. 475 is your grad school. It's your ordinary gain or loss and exemption from wash sales. They're two separate but related things. One you claim, one you elect going forward. One you claim retroactively, TTS. 475 only if you do it on time going forward. A lot of people ask second questions. I'm only answering first questions. Brand M. Is the deadline to elect 475 for 21 July 15th? No, absolutely not. That was the election last year because of the COVID postponement. The election is the regular April 15th. It's April 15th this year, not July 15th this year. Paul T. Does the IRS acknowledge by letter? No, 475. They don't confirm it. They may not even realize it if it's attached to something, and they may not even properly put it on file, and you need to attest it in a perjury statement in your 3115 later. So you need to do it properly, maybe file it by letter or fax, certified return receipt. After all, that may only be confirmation that you filed the extension, but you did attach the election. So don't play games, do everything right, exactly how I tell you to do it in our content and the guide. Again, I think everybody should get the guide. It's only $60. If you think today's session saved you money, you haven't seen anything yet. The guide will save you 100 times that money, or 100 other things, maybe not 100 times the money. Kevin K. Oh, okay. Andrew D. I think I answered Andrew already. Maybe not. Yeah, I did, Andrew. Farzad L. The wife and husband are individual trading accounts. This can get very tricky, not linked to each other. Should they trade log to figure out wash sales across all accounts? Yeah, wash sales go across all accounts, but TTS can't be joint. So you might have TTS on your accounts. The spouse may have TTS on the spouse's accounts. You don't have joint TTS, but yet you have to go across all accounts for wash sales. Hirsham E. I'm new to day trading and didn't file an extension for 2020. Well, you still have time to do it. Lost 50K. Well, you're stuck with a capital loss. And now you have a capital loss carryover. And if you made money in Q1, you want to skip 475 because you want the capital gains in Q1 to soak up the capital loss carryover. So you made a mistake. You didn't elect 475 by July 15th. You're in the capital loss hole. You need a capital gains ladder to climb out of the hole, or a 475 election not to dig a bigger hole. So you wait to see what's going on by April 15th this year. 2021 gains, you skip it, you soak up the capital loss carryover, a big new loss, you elect it, and then you have an entity for a do-over. I walk you through all that rationale in chapter 2 of the guide. Get the guide. Every one of you should be getting the guide. Let me see those sales after this. It's going to help make you money, especially since you're not going to really get access to me. You can do a consult, but I'm booked like a month out, and it's getting a month out is getting close to the April 15th deadline, and my partners are booked pretty solid too. So Juliana M, at what income level does make sense for a trader not married to do the LLC? I want you to have enough income to make the health insurance deduction pay off for you, and to make the retirement plan contribution, you can afford to do it, and the income tax savings is at a high enough bracket to offset the payroll tax cost. So I want a decent tax bracket with rock solid trader tax status. I get a flood of people. I want the LLC. I heard it's good. Someone said it's great. I want it. And I talk you out of it. It's aspirational. It's maybe for next year. So it's not for everybody. The TTS 475 might be the first year. Jennifer S, I think I did it to Jennifer already. Andrea L, did I do? No. Okay, Andrea L, you mentioned that you will have instructions filed. Yeah, so check in our blog post, but get the guide. It's all in the guide. Bingo. Don't wait for anything. Dawood G, interesting monthly subscription stock scanner. Yeah, it can all be an expense. Now, if you have a scanner that is a trade copying service and you don't put any thought into it, you're not going to have TTS. But otherwise, if the scanner is for general info, yes, it's part of your TTS expense. I'm going to get to all the first questions here because I don't have that many left. So stand by, Lightspeed. We're finishing up in a couple of minutes. Tim H, is it possible to get TTS having a full-time job? Yes, it is. Just hit all the golden rules. Valerie G came in late. Well, watch the recording, Valerie. That will be up. So some of you have second questions. Just come back to us, get the guide to learn how to do it. So again, let me just quickly show you around a little bit let me close the questions here. So you come to the website, go into the tax center, go to services for consulting if you want a consultation. You'll see that for the tax compliance, if you want that, you're going to have to go on a waiting list for a new client evaluation after April 15th when you do your own extension and election using our resources. Or maybe you'll just wait to sign up with us for next year. You don't just sign up for an entity. You got to do a consult first. You don't just sign up for trade accounting. It's only for our tax compliance clients. Take the time to go through our website and our update notices so that you don't ask us questions that we don't get back to you right away on and you just confuse yourself. The answers are on the website. Don't buy the first year tax compliance client. You have to be invited to do so. Otherwise, we have to refund you and that costs us money. So please follow our website instructions. We're ready to help you, but it's very tough this time of year going into April 15th. So thank you very much to Lightspeed and their group and to Lightspeed traders. I'm glad you came today. Watch out for the recording, and good luck with your taxes. And thank you, Lightspeed.
And thank you for your time, Robert. We do appreciate it. Everybody, thank you for tuning in. We do appreciate your time and hope you found this helpful and useful. Remember, it is right around the corner, so better to get on top of things now than regretting you had done it later. So thanks again for tuning in. Have a wonderful night, everybody, and we hope to see you in the next webinar.